Everyone, welcome back. In this video, we are going to discuss with you the cup and handle and the inverse cup and handle pattern. Now, cup and handle is just similar to the cup. How the cup looks like. First, there is a broad platform in which the bowl is there, and then there is a small handle is there. A cup and handle pattern is similar to that. Cup and handle pattern is generally a continuation pattern. What happens is that first there is an up move and then there is a correction. The correction goes to 1/3 or 2/3 of the initial move, and then there is a roundy kind of a bowl kind of a formation like this, and the volume should be relatively lower when the correction is happening, and then the volume at the bottom should be lower. It should not be a V-shaped kind of a bowl, it should be kind of a cup, and that's why the name comes cup and handle pattern. And then there after the moves to the top end of the correction where the correction started, and then there is a reverse handle kind of a thing which formed, and which is normally in the downward direction again. And when there is a breakout from the handle that is formed, and eventually there is a breakout from the surface that joins the two tops of the cup, the two edges of the cup, and that horizontal line is breached on the upside with volume. Someone should take a long trade with a stop loss, and the stop loss should be just below the handle of the cup, or someone can adjust the stop loss accordingly if there is any small swing low that is formed within the formation of the handle itself. So we should look at the example here, then we will be able to understand in a better way. Here we are looking at in the Kotak Mahindra Bank chart. Here you see first there was an up move and then a corrective phase started, and this is a perfect cup and handle pattern. As you can see, there was a rounding cup formation here, and then there was a correction on the downward direction, and you can see there was a break of this handle on the upside and eventually out of the above surface also, and then actually the price moved like anything. The target for a cup and handle is from this breakout point, the depth of the cup. If from the edge of the cup to the depth of the cup the distance is x, then from the breakout point the distance that is covered here would be the potential target. And as you can see, the stock moved higher and much higher that. So that is why instead of booking all the profit on a single go, someone can actually look for booking the profit in a staggered way and have a trailing stop loss here. Similarly, let us talk about a cup and handle pattern in the downward direction. After a substantial down move, if we can see a pattern, a cup, a reverse cup or inverted cup kind of a thing, and it is formed there, and then there is a corrective up move, and then eventually the edge of the cup actually is broken on the downward direction. If there is a breakdown from the edge of the cup right now on the downward direction, someone should take a short trade with the stop loss above the handle of the cup or any potential swing high that is formed there, and the target should be eventually the depth of the cup, that is the distance between the edge of the cup and the top of the cup, top of the inverted cup. So let us look at an example here. Here we are looking at the Jammu and Kashmir Bank hourly chart. Here we can see the initially there was a very sharp down move, and then there was a correction of the down move in the form of a rounded inverted cup, and there was a handle. Here this handle was not exactly in the reverse direction, but a little bit of correction in the upward direction, and when it was broken you could see how fiercely the downward move actually happened. Ideally the volume should be lower during the cup formation, and eventually when the downward movement in the cup or in the handle is happening, if during the inverted cup and handle pattern during the down move the volume is a little bit on the higher side, then it is a affirmative signal. We can be more assured, and in the breakdown again if the volume is higher we can be more assured. But remember one thing, in the case of cup and handle or inverted cup and handle or any classical technical pattern, Normally in daily charts they are found in a very proper way, and with the volume evidences also there. Many times when we are looking at in a longer term daily chart, if we are looking in a smaller time frame chart like hourly or smaller time frame like 4 hourly, this kind of a chart, we may find that always the volume evidence is not there. Even then, if the price action is according to the classical chart pattern, we can take the trade according to the rules. Now here in this case what happened is that on breakdown, eventually towards the end of the down move, the volume picked up, not just in the breakdown, but still it was an hourly chart. As the price action was according to the way we wanted, we could have taken a short rate in the Jammu and Kashmir Bank. So this is all about cup and handle and inverted cup and handle pattern. So thank you for watching the video. Join us in our next video. Thank you very much.